Okay, AK. Yeah, you can share that one now. Yeah, Jahi's good. Welcome, 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 welcome. We'll be posting the link on the Telegram shortly, so you guys should stay tuned. Welcome, guys. Welcome. Um, if you've joined us, please type where you're joining us from. Where are you joining us from? Let's go. Let's go. So you guys are welcome. How is everyone doing? How is everyone doing? Yo, nice to meet you guys once again. I can see Jahi's good from Enugu. I can see Christian. Okay, no location. Miss Forex Chat joining us from Bedford. Tony from Lagos. Christian from Delta. Adebayo from Port Harcourt. Shout out to you guys. Abuja, Apo Resettlement. Okay, wow. Elkana, good to know you are in Abuja. Maybe one of these days you can come around um, and visit us here at the Trade Academy. Emmanuel from Anambra. So good to meet with you guys once again. Manuel joining us from Spain. Amazing. So you guys are once again welcome to our weekly mentorship. So I do this every Monday. We used to do this on Google Meet, much more in closed space, but because of the demand and a lot of people that we are hoping to reach out to going forward, we decided to bring it on YouTube so that everyone can have access to these mentorship sessions at the end of every mentorship. Okay, so there's a lot to learn. I'll be teaching us top-down analysis today, how to perform top-down analysis correctly, because a lot of people say they are doing top-down analysis, top-down analysis, and the truth is they don't really know what they're doing. Okay, they don't really know what they're doing. So I'll be teaching the right way to perform top-down analysis. Okay, so that you stop losing money from the forex market. Okay, my goal in this life is to make sure that you stop losing money. That's what I hope to achieve. That's what we work, tirelessly here at the Trading Academy to achieve, to help traders stop losing money in the forex market. I mean, so that's why you are all here. Okay, so we start off every day by taking questions. We start off every day by taking questions. So you have questions about the forex market. We're going to be taking the first three questions. So drop your questions on the chat. If you have any question you want to ask about the forex market, anything at all, I'm actually willing to give you an answer, provided it won't expose everything we're teaching here at the Trade Academy for our registered students. Okay, but if it's something I can give you answer here, definitely I'll give you guys answer. So please do well to drop drop your questions on the chat. I'm looking at the chat now. While I feature some of you on our chat here. Okay, so I'm waiting for you guys. I'm waiting for you guys' question. So drop your questions on the chat. Anything at all that you want to learn about the forex market. Once I'm done taking the questions, then we go, straight ahead to what we'll be discussing today, which is top-down analysis, right? Okay, Kennedy, I can see you're just joining us from Federal College Ibadan. Fantastic, fantastic, fantastic. Nice to meet with you guys. Okay, somebody is asking how to read. Okay, let me take the very first question. This should be the first. I'm finding it difficult to set up my trading view. Okay, this question, I already answered this question multiple times. I have a video on my channel where I teach about how to use trading view for your analysis and how to set up. So I'll quickly just highlight that video for you. Let me find that video for you. That will help you set up your trading view like a pro. Okay, so I'm looking for the link right now. Paste it here shortly. So this is the link. I've pasted the link now. This is how to use trading view. Okay, that's the video. That's the link I just posted for you, Mr. Tango, right? The second question says how to read candlesticks. How to read candlesticks. Candlestick reading is something I have a totally different approach to reading and understanding candlestick, and that's the way I teach it. I teach and I interpret candlesticks based on stories. Okay, I try to interpret candlesticks. My approach to interpreting candlestick is trying to interpret the story that the candle is actually telling. It's a much more easier way instead of cramming double top, double bottom, different kind of candlestick pattern, doji, hammer, evening star, morning star. Instead of doing all those plenty cramming all of that, you can just interpret it using stories. Okay, that's basically my approach of interpreting candlesticks, and that's how I teach it. Okay, you should understand that a candlestick is simply a representation of what a market price is saying. Okay, it's just an interpretation of market price. So if you can read a candlestick and understand, try to interpret what the candlestick is telling you, not just cramming it at face value, try to interpret what it's actually telling you, then it becomes much more easy for you to interpret what a candlestick is actually saying. Okay, that's my own method. Okay, now someone says, how long does it take to be a profitable trader? Well, it differs. If you're going to be trying to learn forex on your own without a clique, without a community, you're just trying to learn it solely on your own, it will actually take you a very longer time, like really long time. I mean anything between a year and a half to 3 years, something within that range. But if you're going to be going in with a mentor, with a community of traders like yourself that are encouraging you to trade, then it becomes much more easier. In 1 year, okay, between 6 months and 1 year, you should be well enough on your way to becoming a consistently profitable trader. Now, I use consistently. Being profitable can take you less while. It can take you like 3 months. You understand? Start making money. So that's taking trades, and to an extent you can say that your age is playing out in the market. But to become consistently profitable, you need a mentor, you need a community, you need a group of like-minded people like yourself learning and encouraging you. Because what happens when you trade in isolation is that most times it's easy to become discouraged. Like forex trading is like someone says, is hard way of making easy money. So it's really it's nerve-wracking, man. It's nerve-wracking trading the forex market. So trading it alone can really be discouraging. It can be, if you're trading in isolation, man, it can put some, put some knots on your head, man. So you need to find a mentor, find a community of people, three, four, five, six, seven, eight, nine, 10 of your friends that are interested in learning in forex market. Once they're encouraging you, once there is motivation to go on, give yourself 6 months. Between 6 months, 1 year, you're already a consistently profitable trader. But if you're going to go in isolation, it will take a longer while. Okay. Who else? What is Somebody says, what is the best way to identify a demand and supply zone? Uh, well, for me, it's a matter of structure. At the end of the day, this all boils down to structure. This all boils down to market structure. Okay. One of the things I'll be teaching on Saturday to my students is how to combine SMC and retail trading strategy to actually make like really good money. And one of the things I'll probably be teaching them is how to use demand and supply zones, because most times when people they just try to use a lot of jargons to explain what has always been in the market. Most of the new concepts that people call new concepts in the market are actually like really old things that have been happening in the market. It's just that they just have newer names. You understand? But typically, demand and supply zones are actually just support and resistance zone based on structure. You understand? We call them, it becomes a demand zone. That is why it becomes a structure. It's a demand zone first before it becomes a structure. But at the end of the day, interpreting any of the zones takes a good knowledge of market structure. It's that simple, right? Okay, how to read candlestick pattern. I think I already understand. I've already explained this question. No need to go over it again. I use I interpret it based on stories. I just try to interpret it much more easier than most people actually do. Can we use this analysis for synthetic? Some of the assets are too old enough and are too, or do you mean are not too old enough to get historical events? I think this person, this Mr. Tony, I think you're asking these assets are not too old enough to get historical event support and resistance. I think that's what you actually mean. Okay. Well, I trade synthetics. However, I'm not a big fan of synthetics. I'm much more of a currency trader. Okay, but synthetics, of course, what you need to understand is synthetics are a it's a synthetic market because you're actually trading against the broker. There's no liquidity at the back end. That's what I'm trying to say. So it's just you against the broker. Okay. So one thing with synthetic market, no matter how good they try to portray the broker to be, the truth is the broker is the liquidity provider. You understand? So you're actually trading against them. So you can't really say that the support and resistance happening on the market is actually because of traders or participants playing in the market. It's very easy to manipulate any synthetic market. Let's just face facts. Thank God for derivative, thank God for Quaco market, but this is just fact. We're just being honest here. You understand? They are the liquidity you get. So even if you're seeing a resistance and a support zone, just know that any day the broker wakes up and decides to take away that support resistance, the support, and just keep moving the market like nothing existed there, they will do it and you can't do anything about it. You understand? So when you're seeing a support and resistance zone in a synthetic market, they are the liquidity provider. They are the ones actually showing you what you are saying. It's not a result of result of the players in the market. I mean the buyers and the sellers. Okay, so just so you know. But however, support and resistance works in quotes works. So somebody says, I hope Tony, I hope I was able to answer your question, right? No, somebody is asking, what's the minimum to start forex trading? Well, I typically advise that you start with at least $300. $300. I tell people a small account is usually 95% of the time is destined to blow. Any account below, let's say $50 thereabout, is actually destined to blow. You can act 95%. Of course, there are outliers, man. There are outliers that can take a $50 account, even a $20 account, move it to $150, move it to $1,000. Those things actually happen, no doubt. Okay, but the truth is, if you're actually looking out to practice the ideal trading risk management system and actually trade like a professional trader, You can't practice proper risk management with a $50 account. How much is 2% of your account size? You can't even trade it on 0.01 lot size, right? Because 2% of your account size, like that's a typical professional traders advice to trade per, to risk per trade. Okay, so we're risking 2% on a $50 account. That's less than $1, and you can't even get that on 10 pips on 0.01 lot size. So you can't really practice real risk management trading using a small account. So you're actually looking out for a long term. If you actually want to fund an account and learn practice with that account to a point where you are practically trading as a professional trader, then you need a bigger account. You need to start with at least $200 or $300. Okay, that's what I teach. That's the way I actually advise it. Okay, so that you guys don't make, no, you guys don't burn your hands. Okay, welcome, guys. I think that answers your question, Mr. Kennedy. We'll be diving into top down analysis shortly. Someone is asking how to use indicator. It depends on the indicator. There are different ways to use indicators. I use only two indicators. Okay. I use moving average and I also use Fibonacci. Those are like my two most common indicators that I use. Okay. And I hear people say indicators don't work, indicators, all those things are lies. Okay. Anybody telling you indicators are not working is not telling you the truth. They actually don't know how to use it. Indicators, use indicators for confirmations. If you're using an indicator to perform an analysis, you might be wrong, okay, because indicators are lagging. But when using an indicator to confirm your bias, then it's okay. It's okay to use indicators. Okay, so I hope that answers your question, Elkana, right? Okay, James joining us from Italy. Good to see you. Welcome, guys. So I think I've been able to take out all the questions. So let's dive into what we'll be discussing today. We're talking about top-down analysis, right? This is something a lot of people have heard but don't really know how to do that. Okay. Now, if you've heard about top-down analysis, type yes on the chat. If you've heard about top-down analysis, type yes. If you've not heard about it at all, type no. So I'll know the number of people, the people that I have here, and what you guys actually so I'll know the angle I'm coming from. So if you've heard of top-down analysis, type yes. If you've not, type no. Okay, good. I can see yes. Okay, who else? No. Okay, I can see yes. Who else? So that I can tell and I can know how to tailor my teaching to fit in everyone so that no one is lost during this mentorship, right? Fantastic. Yes. Okay, you've heard it. Okay. Somebody's saying I've heard it. Yes, but I don't know what it is. Amy Rem is saying no. James is saying yes. Okay, fantastic. So let's go. Now, top-down analysis. Let me share my screen. Let me share my screen. Okay, I do hope everyone can see my screen. Can everyone see my screen very comfortably? If you can see my screen very well, like type 1 on the chat. Type 1. That's the number 1 on the chat. So I can confirm that you guys can see my screen very well. Okay, I think I can see my screen too here. So we are good to go. So top-down analysis is simply a way of viewing the chart that gives you the best possible predictions in the market. It's a way of viewing the chart that gives you the most probable um, outcome of a chart. Okay, that's what the top-down analysis means. It simply means you're viewing the chart, you're doing analysis from the top to the bottom. Okay, from the top to the bottom, you're doing your analysis, trying to view what the market is doing from a high pedestal then down to a lower pedestal. And that's like the very best way to view the market, because what most people don't know, or what most people don't understand, is that the big players in the forex market, the big banks, the institutional traders, the hedge funds, the big banks that have, like, billions of dollars to actually trade the market, those guys are not really trading on a lower time frame. They are not trading on like 1 minute time frames and those kind of time frames. Okay, they do very, but most of the time, they actually trade on higher time frames. So for you to actually know what the big boys are doing and how they trade and how to follow their trade, it becomes much more advisable that you do your trading and follow your trading from a top-down analysis approach. Okay, so now there are two mistakes that people make when they are trying to do a top-down analysis, and let me tell you the mistake that most of them actually make. Okay, first mistake that they make is they fail to understand. That's the, I think, let me be writing these things down. Coming, let me share my screen. Let me share so that I can use my paint app to share these things with you, right? A minute. Okay. Okay, good. So I do hope everyone can actually see my screen much more clearly. So I want to write these things down. So in case you need to write it out, it becomes much more easy to write it out. Okay. So number one mistake that people make is they fail to understand what kind of trader are you. That's the first thing. What kind of trading? What kind of trading are you doing? This is the first question that you need to ask yourself once you want to use a top-down analysis approach. Okay, you ask yourself, what kind of trading are you doing? Because that will determine, that will set the boundaries of how to actually approach the market. Are you a scalper? Are you a day trader? Are you a swing trader? Or are you a positional trader? Let me explain each of this. As a scalper, you're looking to maybe go into the market on a very lower time frame, take out 10, 15, 20 pips out of the market, and you're done for, maybe take it multiple times during the day. Maybe you can take as much as a scalper, you can take as much as 15 trades in a single day, because you're just looking at little movement in the market. And on the average day, a currency like Euro USD moves like 80 pips, 80 to 100 pips every single day. So if a scalper that is looking to take like 10 pips, you can be in and out of the market even on the same currency for, let's say, 15 times. You're a scalper. That's the way you trade. Okay. Now for a day trader stays a bit longer in the market than a scalper. Okay. A day trader can be a scalper, but a scalper is not really a day trader. Okay. Because as a day trader, what you're looking to do is to enter a trade, and at the end of the week, at the end of the day, sorry, you close out all your trades and hope that you have made profit, in between the profits and the losses that you've actually made for that day. Okay. So as a day trader, you're not looking for small pips. You're looking for, like, maybe let's say 30, 40 pips, 50 pips thereabout, during the day. Okay. You're not looking to trade multiple positions, because you're spending more time than someone who is a scalper. Okay, that's your style of trading. Now, as a swing trader spends more time in the market. As a swing trader is looking to take a trade maybe on Monday and doesn't close it up until, let's say, Friday, okay, or Thursday. Okay, some swing traders, yes, spend a little bit less time in the market. These are what I'm giving are just textbook definitions. Okay, but there are perks to these things, right? Because a person can be a swinger but also a day trader. Okay, but this is just like the textbook definition of what these people are. Okay, so a swing trader spends much more time in the market. Is looking to take from one swing to the next swing. Okay, from a swing low to a swing high, or from a swing high to a swing low. Okay, right? So that's a swing trader. He spends much more time on a trade. Now, for a positional trader basically just takes the position. He's more like an investor in the forex market. Okay, Forex trading is not investing, but positional traders are more like investors in the forex market because their approach to trading is like an investor's approach to trading. They take a trade and they probably just close their PC. They don't even look at it again till the end of maybe the month. Once they've taken a position, they don't approach it again till like the end of the month. Okay, something like that. That's what positional trading actually is. Okay, so you need to find out what kind of trading are you doing. That's the first thing. If you don't know the kind of trader you are, it becomes difficult to actually apply a top-down analysis because of the second reason. Now, this is the second reason, and this is the second mistake that people make when they are trying to perform a top-down analysis. Now, number two is, what are your boundaries? What are your boundaries? Because a top-down analysis requires boundaries. It requires boundaries, okay? Because you need to know where is my top and where is my bottom. Because it's called a top-down analysis for a reason. You want to start from a higher time frame and into a lower time frame. So the question is, what is the boundary? Because the boundaries of a scalper is not actually the same with that of a swing trader. The boundaries of a swing trader is not the same as that of a positional trader. You understand? So you require boundaries to actually do a top-down analysis. Now, for example, let's be more practical. As a scalper, okay, so I'm trying to just look at the comments for a minute. I can see somebody's comment, which is quite funny here. Guy says that scalpers are like thieves. Okay, so the sorry, I lost my train of thoughts there. So I'm trying to recollect what I was saying before this comment distracted me. So what are your boundaries in the market? That's the question. As a scalper, your boundaries are different from the boundaries of a day trader, and as a day trader, your boundaries are different from that of a swinger and also a positional trader. Now, as a scalper, if you are looking to take like 10 pips in the market, you're looking to enter a trade within 10 pip movement, you're out of the market. It becomes very unwise of you to start your analysis on a monthly time frame. You can't be starting a scalping analysis on a monthly time frame as a scalper. Every single monthly candle you're seeing is up to 500 pips, more than 500 pips. We're talking about between 800 pips to 1,000 pips, one single candlestick on a monthly time frame. Okay, you can't start your analysis. You're looking to take 10 pips. Why will you be doing analysis of a chart that each of the candlestick is over 1,000 pips? It's not wise to do at all. You understand? So as a scalper, your top boundaries cannot include a monthly time frame nor even a weekly time frame. The highest boundary that I typically would advise you take should actually start from a 4 hours. Start from your analysis, from your top-down analysis from a 4-hour time frame. That's what I advise. Okay, and I'll give you more reasons to do it that way, because most people, they just operate top-down analysis, and they go to start from the top, from monthly time frame, and what you're looking to take off on market is 10 pips. It's not wise at all. Okay, it's not wise. As a day trader, you typically want to start your analysis from, let's say, weekly time frame. That's fair enough. Start from weekly time frame, find out the market bias. Now go down to a lower time frame, find out whether your bias is confirmed, then go down to another lower time frame and look for entries. Okay, so you need your boundaries, or your top boundaries and your bottom boundaries. Is what I'm saying, is what I'm teaching, is it making sense? If it's making sense, please let me know on the chat. If it's making sense, if someone should type on the chat, making sense, making a lot of sense, type on the chat. Let me be sure you guys are following, because I want to like jump into the next mistake that people make, so that I'll sure everyone is following so far. If you're learning something, let me know on the chat. If you're learning something, please let me know on the chat. If you are learning something, type on the chat. Let me be sure you guys are following me, because I'm about to move with the speed of light, like right away. I'm about to run with the speed of light right now, because I want us to end this, by 12 p.m. Okay, making sense exactly. So fantastic. I'm glad you guys are learning something. So you should know your boundaries. Okay, know your boundaries. Okay, as a scalper, your boundary should be between, let's say, a 5 minutes time frame for your bottom, okay, and a 4 hour time frame for your top. You can actually do 50, you can actually do 1 hour, okay, for your top, right? Now, as a day trader, your boundary should be anywhere between 30 minutes time frame as your bottom, and let's say a weekly time frame for your top. Okay. As a swing trader, you're staying longer time in the market. You can start your analysis from the weekly for your top and bottom for 4 hour time frame. If you're a positional trader, of course, you can do monthly. Look at the monthly time frame, get the outlook, then take your trades on, let's say, daily time frame. Use the daily time frame for your entries. If you're a positional trader, okay. So I hope I'm making sense. Now, number three, which is the last, mistake, which is the last mistake that a lot of people make before they do their top-down analysis. Sorry, let me read on the comments. Okay, someone is saying making sense. Okay, fantastic. So I'm glad you guys are actually following. Now, number three thing to consider when you are actually doing, doing a top-down analysis is what what or will I put it? I don't know how to say what or when. Okay, what amount of time are you willing to spend on a trade? Let me put it that way. I don't know how else to write it, but I think you guys understand it when I explain. What amount of time are you spending on the trade? On the trade. Okay, good. Now, this is a little bit complex, and most times people don't see this as a worthy consideration when they are doing their top down analysis. Now, let me explain something that will really help you guys. Now, the truth is, if you are a person who has like a 9 to 5 job, your style of trading would be different from somebody who is a full-time trader. Somebody who is a full-time trader has more time than you. Like, he wakes up in the morning, he's practically doing nothing else than looking at charts. But you have some other job that you do maybe during the day, some hours during the day, and you have, like, let's say 4 hours to trade. Okay, your approach to the market should be different, because as a full-time trader, you do not want to sorry, as a trader who has a full-time job, you do not want to be giving more time to the charts than you're actually giving to your job. That would make you like very, very unproductive, right? So you have to develop a form of interpreting the chart that suits your time. As somebody who has a full-time job, you can either choose to be a scalper or a positional trader. You can't really function very well as a day trader, because day trading is quite demanding, right? You have to just follow like every single 1 hour candle close. You're looking at it, watching it, looking at what the market is doing, trying to find the trading position, right? But as a scalper, you can look at, maybe let's say you have 1 hour to trade during the day. You can just look at a one hour chart, a 15 minute chart, and enter a trade on a 5 minutes time frame. Okay, because that's the amount of time you have to spend looking at your chart. You understand? But and also, as a positional trader, you can just trade during the weekend. On Saturdays, just take your time, look at the daily chart, look at the monthly chart, look at the weekly chart at the end of every week. And if you see a good setup for yourself, you enter the trade. You understand? So the time you are actually going to be spending on trading, actively trading, determines the kind of approach you're going to give your top down analysis. Okay, so let's face it. What I'm trying to say with all the three reasons I'm giving you right now is that top-down analysis is different for every single person. That's like the crux of everything I'm saying. Someone said, please, can you come back on top? Sorry, let me highlight this comment here. Somebody is asking, please, can you come back on top-down analysis for scalpers? For scalpers, what I'm saying is, as a scalper, your top should be like 4 hours, your middle time frame 1 hour, and you can do your scalping on a 15 minutes or a 5 minutes. Okay, so your top boundary is 4 hours and your bottom boundary is 5 minutes. I don't know why people trade on 1 minute. I don't know why. I don't understand why you should be trading on 1 minute time frame. Okay, but it seems to work for some people. What I've learned in this, let me teach you guys something. What I've learned in this market is there are some things that just works for some people. I don't know why. I don't know how it works for them, but it just works for them. Okay, so I try not to be. I try not to act like I've seen everything. I know everything. That's not really true. Okay, I've said this by the end of by towards the half of this year, I'll be 7 years experience in forex market. So I've seen things. I've seen people blow account. I've seen people make money. I've made money myself. I also blown money myself. So like I've seen it all, almost all. Okay. So I've learned enough not to say that this thing doesn't work and just make absolute statements like that. I mean, you're not the god of this market. I mean, people can make money even without following your strategy and you can't do anything about it, right? But I just wonder why people trade on 1 minute time frame, because to me it doesn't make any sense. Why should you be trading on a 1 minute time frame? Like, why? Okay, so for a bottom boundary of a scalper, 5 minutes, your top boundaries 4 hours. Don't go beyond that. It's not that wise. Okay. Top analysis in 4 hours. Okay, good. So we are good to go. So let's now go to the charts. We have 15 minutes now to do the charts, and then we'll take questions. Now, as a scalper, okay, let's do day trading. Okay, I already explained to you guys. Let's start with Euro USD. Let's start with Euro USD. Let me do let's see. Okay, good. Okay, as a day trader, you come to your PC every day looking to get a trade to actually take. Okay, so you start your analysis from a weekly time frame. What you're trying to do is to, on the weekly time frame, you're trying to get the general outlook of the market. Okay, and from what we're seeing here, this is looking like a market that has been trending for way long time. Okay, it has given us series of higher lows, lower highs, lower low, lower high, lower low, lower high, lower high, and lower low, right? So what you have successfully done right here is, on a weekly time frame, you've already confirmed the bias. The bias is sell. This market is on a sell trend. Okay, that's what you're going to confirm on a higher time frame. And in this case, as a day trader, this is your bias. It's on a sell. This is a no-brainer. Okay, you can add a moving average to confirm that bias. This is clearly a downtrend. Okay, as you can see, the market is below the 20 moving average, which is this slim one, and the 15 average move is this bigger one. Okay, so let me remove them. Now we've already confirmed that bias. Now you go down to a daily time frame. What you want to do on a daily time frame is to confirm that the bias you saw on the weekly time frame is still good. It's still good. You can see very well it's still doing series of lower lows, lower highs, lower lows, lower highs. Okay, so your bias is confirmed. So you're looking for entries either on a 4 hours or on a 1 hour. Okay, when you perform your analysis on 4 hours and 1 hour, now there's a way I teach that we perform analysis here at the Trading Academy, which, sincerely speaking, I would love to have been detailed about it, but I will really not be detailed about it. Just to be sincere with you guys, I mean, people are paying to access this kind of knowledge. I can't be giving you guys for free. I know you guys, I mean, you guys understand this, right? So I don't need to press on it. I really wish I could, give you guys everything, but unfortunately I can't, right? So let's assume you've performed your analysis, and your analysis says on a 4 hour, on a 1 hour time frame, that you can actually sell. So this is the time frame where you do your selling on a 4 hours and on a 1 hour. If you have a market structure, do not put your market structure on your execution time frame. If you want to put a market structure, put it on a daily time frame. If you want to do your market structure, draw your support and resistance, I typically advise don't draw your structure on a time frame where on the same time frame where you are actually going to be executing the trade. It's not a very wise approach to trading. Okay, so you draw your market support and resistance zones on areas of the chart, on time frames on the chart where you are either on the middle, but not on the top. For instance, in this case, because we started analysis on a weekly time frame and we are going to be executing on a 4 hours or on a 1 hour time frame, we are drawing our structure on daily time frame. I hope you guys are taking note of this. Now, if we are going to be scalping, that means we are going to be executing on, let's say, a 5 minutes or 15 minutes time frame. That means we are starting our top analysis from the 4 hour time frame, right? We'll do 4 hour analysis to determine our bias, then do a 1 hour time frame. It's now on the 1 hour time frame that you're going to be drawing your market structure, your support and resistance, break of character, and all those kind of things, right? You do it on a 1 hour time frame, then you execute on a 15 minutes time frame. The reason why I teach it like this and I advise you guys to do it like this is because if you do not, if you, most times, your bias would rarely, this I'm sharing with you is from experience, and I feel bad like I'm sharing it for free, but let me give it out, okay? Most times when you perform top-down analysis, if you want to get a higher risk to reward on the time frame of your execution, ignore the market structure and focus on candlestick pattern. This will be confusing, but let me try and balance it. If you're going to, let me say it again, okay? Let me repeat it, then I'll now explain it very well. If you're going to get a higher risk to reward, okay, and you've performed your analysis on higher time frame, let's say on a 4 hours, you've done your confirmation, you've done your market structure on a 1 hour, which is like the middle time frame. On the execution time frame, which is the 1 hour and the 15 minutes, ignore the market structure, focus on candlestick patterns, because it would rarely, most times, in fact, less than 50% of the time, your execution time frame will rarely support your analysis. Because if you're looking to enter the trend when it's actually starting, it will not look like it's following your bias. If it's already following your bias, that means the market is already moving before you entered. So for a higher risk to reward, most times what I do, I ignore on the execution time frame. Pay attention to what I'm saying. Attention is key. On the execution time frame, ignore the chart pattern, focus on the candlestick pattern. Okay? I don't know how else to push this thing, but if you're understanding me, please type on the chat. Let me show you understanding me. Okay? Let me be sure that I'm not blabbing. Okay? So if you understand what I'm saying, please type it on the chat. Let me be sure that you guys are getting what I'm saying before I round it up, okay? And you guys can ask your questions, right? Drop your comments. Let me be sure you guys are getting what I'm explaining right here. Somebody says I don't understand. Who else? You guys to drop comments. Let me know that I can. Okay, good. Someone says I'm understanding you. Okay, good. I'm glad someone is actually following. You guys should drop. Okay, I'm understanding you. Who else is grabbing the value I'm dropping here? The amazing values I'm dropping for you guys here. Somebody says it's making a lot of sense. Fantastic. Fantastic. Keep it coming, guys. Keep the comments coming. Okay, somebody saying we are following value, value, value. Fantastic, fantastic, fantastic. I understand, but it's confusing. Oh my God. Good day, FX Daddy. Where can I get your link to your boot camp? Okay. Let me type it here. Keep the comments coming, guys. Let me know what to explain before we round up. Of course, it's not practical that I will actually teach everything about forex in one day. So, but I'll do my best. Okay. Okay. So I just dropped the link to the to our course. It's tradewave.seller.co. We have three student packages: the basic student package, corporate student package, and elite student package. Well, you can always start with the basic package and upgrade your package if you would love to. Okay. Somebody saying thank you, thank you, thank you. Somebody saying give us everything. Sandra, I should give you everything. What will I now give my students? Somebody said, can you highlight the candlestick part? Somebody said, I understand. Okay, good. I'm glad majority of you are actually understanding this thing. Okay, what I'm trying to teach is very simple. I hope everyone can see my screen. Now, what I'm trying to teach is very simple. If you're doing a top-down analysis, you need a top, you need a time frame, top time frame, and a middle time frame, and a bottom time frame. I hope you guys can still see my screen very well. So you need these three time frames, right? Okay. Now the first time frame is for your bias. You use this to confirm your bias. Second time frame is for confirmation of your bias and market structure. Second time frame is for confirmation of your bias of the top time frame and then market structure. Okay, this is where you draw your support and resistance. Let me put example: support and resistance, or let's say market character, anyone you call it, if you're an SNC trader or whatever type of trade. Okay, this is what you do on the middle time frame, right? And on the bottom time frame, this is where this is your entry time frame. Entry. This is where you do your entry. This is where you enter the trade. Okay, this is like a breakdown of what I'm actually trying to teach. You need three time frames: your top time frame for your bias, your middle time frame is where you do your confirmation, your market structure, your support and resistance, your market character, and then you enter on a bottom time frame. And what I'm trying to explain is that most times, if you want to get a trade that will typically give you a high risk to reward, like 1:2, 1:3, 1:4, 1:5, most of the time on the bottom time frame where you actually do your entry, you would rarely see an entry that is obeying your bias. If it is already obeying your bias, what I mean obeying your, like going in the same direction with your bias, you understand? If it's already going in the direction of your bias, you can't really get a good risk to reward anymore because the market is already moving your direction. So most times the market that gives you a good risk to reward is a market that looks like a trend reversal on your entry time frame. I can't stress it anymore. That's the best. I can't explain any more than this. Okay, somebody said I've been following GBP US since Friday. Do you think I should focus on one currency pair? Well, it's not a bad idea to focus on one currency pair. I did that at some point in my trading, focused on one currency pair, which was GBP USD, because GBP USD is like the typical, especially if you're here in Africa, the market, the UK session opens by 8 o'clock, just 7 a.m. thereabout, which is, typically our own waking up time, and closes at about, 3 p.m. in the afternoon. So that's like very good in terms of market at trading cycle. Okay, so you can focus on GBP USD. That's fine. I did GBP USD at some point. I started trading 3 at some point, from 3 to 5, from 5 to about 12, then from 12 I'm currently trading on 18. Okay, so you can actually focus on one. That's fine. Somebody said, what about 15-minute candlestick behavior? What should we be observing and their significance? Like I said, if you are here when we started, I explained that the significance of each time frame depends on the kind of trading you're doing. Are you scalping? Are you day trading? Are you swinging? Or are you a positional trader? So that will determine what you're looking at for on 15 minutes. Your 15 minutes can be your bias, it can be for confirmation, or it can be for entry. But it depends on what style of trading you are doing. Okay, I already explained this. Somebody says, I use 15 minutes for execution. Hope it is okay. Excellent. That's good. Depends on the kind of trading you are doing. Once again, depends on the kind of trading that you are actually doing. Okay. So I think that should bring us, to the very end. Let me say a few things before we go. Now, we're going to be doing this every Monday morning, okay? 1 hour every Monday morning. I'll come in here, take your questions, and I'll teach you 1 or 2 things about the forex market. So today we talked about top-down analysis. So I want someone to suggest, what would you want us to talk about next week? Someone should suggest what you want us to discuss next week, so that if we're coming next week, we know that this is what we are coming to be learning. It's totally free. Okay, so someone should suggest what you want us to discuss next week, because the forex market is very broad. Like, we can teach the forex market from now to next year, and we've not exhausted what to teach, especially someone like me. Okay, I'm not just a good trader, I'm actually a good teacher. Okay, teaching forex is something like I can do it anytime, anywhere. All right, so, and that's why I actually love teaching it. Okay, so there's a lot to learn. There's a lot I want to teach you guys, so they can start making money practically. Okay, now secondly, if you are yet to subscribe to this channel, I don't know where you're joining us from, but please subscribe to this channel. Like, click on that subscribe button, like right now. Click subscribe, and please give this video a thumbs up, like right away. I just gave it a thumbs up, so give your own thumbs up right now. Okay, so if you want to join our full student mentorship group, we do our own mentorship classes currently on every Saturday. Okay, so that we'll have more people, we have more time. So we'll do it every Saturday. Every Saturday, we do a mentorship class where I reiterate the course, everything I've taught them, reiterate the strategies, try to follow everyone up. Because most times traders don't do well without a proper follow-up. If you don't have a community, some people following you up, trying to know what you're doing, what you're trading, trying to follow up with your results of trading, it becomes much more hard. Okay, that's what we try to provide in the community and the academy. We take you through our curriculum, over 30 video material trainings on how to trade forex. Like, from, even if you know nothing about forex, even if you know absolutely nothing. I have one of my students from Cameroon. He came in last month, I think, something somewhere around ending of January. He came in, and like, he knew nothing about forex. The guy is consistently profitable right now, making, I don't know whether he's on this call. I don't know. They usually don't join the general mentorship because they have a private class. But however, I don't know if the guy is here. Mr. Gerald, if you're here, please put a comment or something. Let me be sure that you're here. So he has started making like profitable trade, like consistently profitable in his trading. Okay, so that's something possible. Okay, you can achieve with good mentor and a good follow-up group, a good community. Okay, so that's what we provide at the Trader Academy. Okay, so if you guys want to join, I've already dropped the link here, or you can send me a private message on the Telegram or WhatsApp. Okay, now let me look at what you guys are saying. Somebody's saying fundamental analysis. Okay, fundamental. Somebody's saying capital, how to get capital. Okay, candlestick. Okay, yeah, candlestick analysis. I already mentioned part of that. Fundamental, under fundamentals, candlestick, Fibonacci. What? Okay, you know what happened. So next week I'll be speaking on fundamental analysis and how to get your capital. Those are the 2 topics. So you guys should remind me next week. We're going to talk about fundamental analysis and how to get your capital. Okay, fundamental analysis and how to get capital. Okay, I just took a quick screenshot so I don't forget. Okay, so see you guys next week. I love you guys. Make sure you subscribe to this channel and make sure you liked this video. Have a wonderful week trading, and goodbye.